We have Shreyash Devalkar. He's head of equity at Axis Mutual Fund. He's joining us now to talk to us about markets, talk to us about how they are positioned. Shreyash, good morning. Good to have you with us here. Thank you very much for your time. Prashant this side. Shreyash, vibrant market, isn't it? I mean, if you're willing to maybe sort of go down the curve a little bit and widen the horizon, as many on the sell side are doing with newer initiations, etc., every day, a few at least. How are you looking at how are you and the team at Axis looking at markets from here, Shreyash? Many have complained that it's kind of hard to find ideas. But are you of that view, or you think you got to be willing to maybe look a little lower down the market cap curves now? Go on.
Yeah. Good morning. Actually, as far as markets are concerned, always at this stage of the market, it always gives us a feeling that all stones are turned and nothing is left. And that's where the existing, the stones which are turned already, obviously are at the elevated valuation. So at this juncture, there are two ways that you are suggesting. One is you try to find out more and more. That process, irrespective of market, is always on. It's not that current level. But then there are certain opportunities which are there around data centers, around EMS, and more are coming up. More companies are tying up around those spaces. So those opportunities in that segment especially is where probably currently market is trying to find out more ideas. But when it comes to the segments like power, defense and all, their market has definitely evaluated and discovered most of the stuff. So that's where at this juncture, the point comes back to what is and where is that sustainable growth. Just try to sit back and try to see that beyond the themes and where there is really growth and where there is a risk reward favorable. And then when you observe that, then what you will observe is, especially when it comes to the movements of large, mid, small cap segments in last 4 years almost, it is observed that generally in the large cap segment, some of the pockets which has underperformed definitely, and that's where we are also trying to find out ideas now where there is where market has focused overly on near-term growth and valued them at 50, 60, 70p. So instead of that, try to focus on where the growth may be relatively less at 12 to 18% kind of growth instead of 25 to 30, 20, 15 to 30, 25% of growth. But then the valuations are really in favor, and especially adjusting for the free cash flow generation ability of such businesses. So this is how we are looking at this juncture.
Okay, by the way, I just wanted to mention a couple of stocks along with Amara Raja Batteries, which is now, by the way, up 15% on the back of that technological arrangement. Exide is also at a fresh high this morning. So Exide is up 3.5%. It's a fresh 52-week high. Both these stocks, because of the huge potential in lithium-ion battery manufacturing, Amara and Exide are really surging this morning. Indian Hotels is the other one, fresh high on that name. The evergreen theme of travel continues, travel and tourism. So Indian Hotels is at a fresh 52-week high, almost at 660 rupees now over there. And a couple of other names that stand out: ITD Cementation, Suprajit. Trent is at a fresh high, 54.27 now on Trent. Big moves coming in on that name. Shreyash, hi, good morning, and thank you for joining us on the show. I wanted your thoughts on quick commerce, right? Just because Zomato is in the news so much, I mean, data shows that Zomato's scale is now 30% larger than Swiggy, for example. And, we've all seen the way Blinkit is performing. If someone has missed out on this rally so far, do you think this is a structural story, a structural upcycle in some of these consumption names?
So good that you highlighted and tried to focus on the consumption names back, because generally market has been more focusing on the investment part of economy, especially and in last 2 to 3 years, and rightly so. Some of them have shown that kind of movement. But when it comes to consumption, definitely there are structural changes and the underlying trend which is happening. and one being especially in the retail industry. So retail industry, what we have observed is there is, so if you just try to break your consumption space into the FMCG versus retail, then generally we always positioned ourselves more on the retail side because there is a room for growth in that. And in that retail industry, now these are the next steps. So first is home delivery started with, then quick commerce. And considering the demographics, considering the diverse nature of India, it's both combination of city, then there are suburbs, and then there is a demand from the new age, the new generation, and that's where the consumption trends and the patterns and the usage patterns are changing. So first is obviously the trend is on, but then as an investor, we need to definitely focus on the profitability, our path to profitability. And we have seen that when it comes to home delivery, the profitability part was not lucrative earlier. But then end of the day, first even QSRs never used to show very high profit, and then the QSR started showing profit, and that was the first form of the home delivery. Then the other companies which are the which started with the home delivery as such quick commerce, they also started showing you path to profitability. So quick commerce also with the scale and learning, etc. So we hope that even that part also shows path to profitability.
Shreyash, morning. You also manage the Midcap fund, the Midcap fund, and you've been active on that front. Where the argument on valuation versus liquidity, because liquidity appears to be driving up the valuations to astronomical levels in some cases. So how are you managing? Because if you miss out on it, then the fund underperforms. So where is it that you're seeing value right now? Take us through the thoughts of picking up Midcap stocks now.
Sure. So Midcap, if you observe in last 1 year or so, actually the observation is for 2 to 3 years, but especially last 1 year or so, definitely the valuations are elevated. Generally, among large, mid, and small, one observation is Midcap segment had a higher proportion of PSU in the underlying benchmark. So it is upwards of 15% in the underlying benchmark, the PSU contribution. And that's where the mid-cap as a segment actually outperformed or did in line with small cap in certain time period. And it has outperformed more because of that. Because PSU rally has seen a very sharp rally in last 1.5, 2 years. So that is where the mid-cap segment is. Now, if you just try to dissect that segment, then the capital goods part, that part definitely, and anything to do with industrial, so it's industrial capital goods, that part definitely it is at elevated valuations, no doubt on that. There are pockets, especially in the consumer durable part, and in overall consumption space, there probably the stocks have not moved a lot in last over last 5 years. So that's where we are just looking at more of where there is a lack of re-rating over a 5-year period, because in last 2 to 3 years especially everything has gone up. So that re-rating potential where there can be with the delivery of earnings, that's what we are trying to look at. And that space one need to find, especially in the consumption basket. Mid-cap, generally you'll observe that FMCG has higher representation in the large cap, while mid-cap has more representation of consumer durable and discretionary.
No, got that. Shreyash, stay with us. I'm going to come back to you for more, but let's also bring in Niket Shah, who's with us. He's Chief Investment Officer at Motilal Oswal Mutual Fund. Niket, good morning. Good to have you with us here. It's been a while since we've had a chat. Just weigh in on how you are approaching markets from here on. And let's just actually dive straight into one particular sector, right? Motilal as a fund house has been pretty bullish on this entire telecom theme. Vodafone Idea, for example, in the FPO, etc. He's done well since then. Now, of course, it's the test of actual tariff increases. Markets are waiting for it. What is your sense? What are the best plays here in this space, and what's the story? How is it likely to play out?
So thanks for having me here. I think clearly, as you articulated on telecom, we looked at this theme in the initial part of the year, somewhere around January or Feb. And I think two things to really play out. One is obviously the tariff, I guess you rightly articulated. But I think the second part is the balance sheet improvement, right? If you look at the last 10 years for telecom, there was impact on balance sheet because of the high capex cycle in 2014-15. And then a tariff war which happened from 2018 to 2021, which deteriorated balance sheets for most of the companies on the listed side. What we are now seeing with tariff hike increase is the P&L will improve first, and then the balance sheet will start improving later on. which should actually lead to improvement in return ratios and hence valuation over a period of time. So we are extremely optimistic on this entire theme. We are in fact 7 to 8% overweight on telecom since beginning of this year. And we believe that some of these, themes like, the tariff hike increase or, the reduction in the AGR liability should actually play out over the next, 3 to 6 months.
Without getting outside of what is already published and what is available information, Niket, are these operators the best way to play the theme, or could it be, say, Indus Tower? Do you have exposure there, just to kind of complete that loop?
So we actually have exposure across the board. We have exposure to some of the listed telco names, some of the equipment guys as well, and indirectly, from the leader in the business as well. So we believe the leader, which is obviously the channel that you own, is not listed, but I think you can obviously pay through the listed company out there as well, which is the holdco company as such for now. So we have actually played across the board. Every stock within the telecom sector is there in our portfolio today. We believe the whole ecosystem will do extremely well over the period of next 2 to 3 years. And we actually think that Indian tariff is actually at a substantially lower price than if you compare with anywhere in the global markets. So I think one should not assume that this is the last tariff hike and things are done. I think you should see a tariff hike even next year. So this eventually becomes a 2-year story for us.
Okay, that's very interesting. 2-year story in telecom and overall positive triggers for the sector. Niket, hi, good morning. Good speaking to you. I wanted your thoughts also on quick commerce. We were just having the discussion with Shreyash as well. And you folks at Motilal have been positive on names like Zomato for a bit. But I want to understand this from you. This growth rate that you're seeing, right, 30% GOV, 25% GOV, is it something that is sustainable? Because there's now increasing competition in this space as well. So for listed players, can this pace of growth continue?
So I think on food delivery, you should see about 25 to 30% growth sustaining at least for the next 2 years. And I think there is no major competition intensity beyond the two players that we're talking about. When you move to quick commerce, I think the growth rate will accelerate this year. I think the consensus expectation is about 60 to 70%. Our sense is that most of the companies in the space should actually grow at more than 120 to 130% this year. So I think the quick commerce is here to stay. And I think the growth rate will accelerate. Obviously, most of them have actually announced that they're doubling their dark store capacities this year. So it's driven by expansion of capacities. And I think obviously you are seeing traction within the existing stores as well. Last but not the least, I think the way this eventually is going to play out is, some of the larger e-commerce guys in India will actually get impacted over a period of time. If you look at our shopping habits today, something like a mobile phone, which was typically used to go to a larger e-commerce guy, is now going to be available on a quick commerce as well. So effectively, there will be a significant amount of value migration from a larger e-commerce players on the unlisted side. Obviously, some of them are MNCs to some of these quick commerce guys. So this will become a one-stop solution for a consumer, whether you're spending any money at home or if you decide to move outside your home and start spending there. I think entire value chain will clearly get captured over the next 2 to 3 years.
Morning, Niket. I wanted to get both of your views on the kind of supply that we're seeing. On one hand, promoters' funds are encashing, and it's making some people uncomfortable, just the pace at which we've seen block deals. But on the other hand, you can also argue that it's not just retail, who's buying the supply. It's also smart money, mutual fund managers like all of y'all who are buying the kind of supply. So what have you made of this?
Well,
Niket, if you want to go first, and
Yeah. So actually, to be very honest, we have been avoiding most of the blocks that has actually happened in the recent times. And we have, when we look at all of them on a case-to-case basis, it's very tough to make an investment rationale out there. We have been slightly more active on the IPO side of the market, but on the block side, we have been extremely inactive. And, in a cricket match, there are times where you hit a ball out of the ground for a 6 if there's a full toss, but there are times where there's a yorker. You really need to be very, very careful out there.
Shreyash, you want to weigh in on this debate of the kind of supply that we're seeing and the pace of it?
Yeah, definitely. So actually, when it comes to supply as such, definitely it is good, in my opinion, to the extent that in some of the segments, especially in mid and small cap, there is the free floats actually will increase in this. Now, the question is whether one should buy into it is really case specific, because on the one hand, higher supply and better free float is good for market. and good for price discovery as such. While on the other hand, whether one should get into it is on a case-specific basis. We generally try to look at whether the company is getting the money or not. So certain criteria we have, and accordingly we act. So it's not a blanket answer for that.
Shreyash, just when we started this conversation, you mentioned data center as an opportunity. Can you be sort of specific if you own and it's public? What's the best way to play this theme?
The data center as an opportunity is definitely there, and there are multiple segments which are coming into this space. So it can be right from, so now if you look at the value chain in data center, so one is, it is an asset owner or someone who is trying to build a data center. So generally it can be a real estate company, and most of the time it is a real estate owner because that is where, from the owner's point of view, some of the value lies. And that's where there are certain companies which has gone into this space. Then when it comes to what is there in the data center, then mostly when it comes to its racks and its electronics, probably there will be limited companies one can look at into this space. But definitely then it goes to the power supply, uninterrupted power supply. It actually starts with the power supply right from the primary power supply to the backup power supply. And now here there is opportunity one can see. So you have to look at opportunity across the asset owners and the suppliers. And always we have seen that over a longer period of time, markets actually, so whether it is a power cycle or it is any other capex cycle or any other asset ownership cycle, generally someone who is supplier, they have made, market has made more money than the asset owners.
Got it. Niket, I wanted your thoughts on some of these battery makers, right? I mean, the kind of evolution that's happening in the EV space with this whole lithium-ion battery technology. Companies like Exide are, signing contracts with huge global players like Hyundai, Kia, etc. For an average investor, is there more scope in names like this?
Well, I think there is, because I think from a supply chain standpoint, clearly we are looking at some of these large OEMs looking out for an Indian vendor. So I think the one who really goes live first really has a big benefit out there in terms of sourcing. And because most of the guys, including the leader in the business, is likely to come out with their EV vehicle sometime next year. But I think the real important point that one has to keep in mind is that one of the company which has more than 50% market share on the PV side typically wants to do this in-house over a period of time. So effectively, the size of opportunity for a large amount of battery guys is going to be limited to the balance 50%. And that balance 50% is where the opportunity really lies. So the one who really goes live first really makes most of it, over a period of time.
Got it. Niket, two questions. One, what are some of the newer emerging themes that you're betting on? We spoke about a few. That is one. And second, are you adding newer, completely unknown names? I mean, unknown at Motilal. Are you adding newer names every month? I mean, we are seeing, I was talking about this, a lot of, on the sell side, new initiations, right? It's not as if some of these stocks have not done very well. It's just that, I mean, formally now institutional coverage is beginning. It gives a stamp of respectability, if you want to call it. But the stocks were doing well in any case, even without coverage. But it allows, I think, institutions to come in. So I just wanted to get your sense there as well. Are you adding newer names every month? Go on.
Well, not every month, but we definitely don't want the portfolio to remain static. If you have a static portfolio, then obviously it underperforms over a period of time. So you have to play the cycles very well. But I think the newer theme, that the point that you articulated, I think one big theme that we believe is going to play out for the next 5 years is this whole Apple ecosystem in India. So if you look at Apple's export from India, has been $1 billion in April month, standalone month. Single month, India has exported $1 billion worth of Apple products. So on an annualized basis would be about $12 billion. We believe this $12 billion should move closer to $50 to $60 billion in the next 3 to 4 year period. Now, the whole ecosystem of this is something that we have really focused on. We have made investments in that direction. We believe it's going to be a 5 to 7x kind of a size of opportunity from current levels. And these are very initial days as far as this whole ecosystem is concerned. So till now, what we've generally seen is this whole mobile assembly in India. Now we believe the whole component ecosystem is going to go live in the next, hopefully next 1 year. And you will see a lot of government action in that direction, which government has been saying about PLI. in mobile phone as well. So you should see that extending to component ecosystem, but we are specifically focusing right now to the whole Apple ecosystem, where we believe the size of opportunity is very, very large, and that could be the theme for the next 5 years. The second important theme is the whole export theme.
What kind of names there, Niket?
Well, I'm not allowed to mention names, but if you look at some of our portfolios, you will see, some of our portfolios being much more readier in that direction on the small cap side, as well as on the mid cap side.
Okay, export opportunity?
Second, I think, is like export opportunity. So I think we clearly believe that, in the next 12 to 18 months, I think IT will make a big comeback. It actually has been an underperforming sector on the large cap side, not so much on the mid cap side, but we believe, with telecom that we did last year, we believe in the current year, we should see a comeback of IT, which should go all the way to the next year, December month. We believe AI is now a reality, and you should see increased traction from AI coming up. So I think if you take a higher growth rate in IT, then the valuations are much more reasonable. So at a time where within the mid cap and small cap space, valuation is a concern, but there are sectors and spaces where valuation is still much more reasonable. So we have taken about a 10% overweight position right now on the IT side as such.
Okay, it was a pleasure speaking to you, to both of you actually. Thank you so much for joining us on the show, both Shreyash and Niket. Very helpful over there.